All right, the point of this video is to show you how to do Unit 1, Activity 8. It's titled Spreadsheets in the Worksheet. I think the most relevant word in there is the worksheet. You guys might remember doing this in grade 11. If you don't, that's why I'm showing you this here. So I think this assignment can be slightly confusing, at least to get started with. Just because there are a few different steps involved and some things that are being asked. But all the skills, as far as what you have to do within it, you guys have done before. There's some adjustments to be done, some closing entries, things like that, which are things that we just did in the previous activities. So the goal of this video is just to get you kind of familiar with what you're supposed to do exactly. So without further ado, we'll go ahead and take a look at this. So the assignment has 3 different components to it that are important. So they're all hyperlinked here. The information, you need to prepare the worksheet. So when you click on that, it'll bring up another tab for you. And it looks like this when you open it up. It gives you basic information that you'll need to complete this assignment. So that's the first thing that you want to have open. Going back to the assignment, the second thing is the worksheet, 10-column worksheet. When you click on that, it'll open up a Excel file for you, or it'll download it and open it. When you open it up, it will look like this here. So I've got this already open, and it has a lot of the information from that information sheet already preloaded to it. So it's basically got the trial balance already set up there. So you don't have to load in a lot of these numbers that are on this sheet here. Okay, the zoom bar got in my way there. Okay. So a lot of those numbers you'll see are already transferred here. The bank account debit, 22,720, accounts receivable, allowance for doubtful accounts, etc. So those are all loaded in already. So that's good. The third thing is a general journal. And again, this is for journal entries, which you guys have done many times before. I won't pull that up right now, just because we're going to focus on the worksheet in this video. I'll probably end up doing a part A and a part B for this. Part A being the worksheet part and part B being the general journal part. So I'll stop it after I do my examples for the worksheet, and then I'll pick back up and do a second video for the general journal, and hopefully that'll make it a little bit more watchable and usable for you guys as you go through this. Okay, so with all of that said, what we want to do is take a look at the information sheet and see what exactly it is that we're being asked to do. So I will do that here in a moment, as soon as the Zoom thing goes away. There we go. Okay. So up at the top, we have Christian Telecki operates a consulting service for businesses wanting to open stores in new locations. The business's general ledger had the following balances for the fiscal year ended April 30th, 2015. All right. And so it's got all of these accounts along with the balances that they have in them. And so, as I said, that's already loaded up into our worksheet, into the trial balance section of the worksheet. So all of this stuff, here is there. And then the balance at the bottom is the exact same, 243,530. Okay, so that's that. We'll look at the bottom to get the stuff that we're actually going to be working with. So this additional information, this is the stuff that we're going to be loading onto the worksheet. So we are going to be interpreting each of these transactions and deciding how that affects the worksheet. So that's what we're going to be doing here in a moment. At the bottom, it tells you what's required by this assignment. So preparing the worksheet, so basically finishing the worksheet. So when we look at this, we see that there's all these columns that aren't filled out. We want to make sure that we fill those in. And then the second part of this assignment, which, as I said, I'll do part B video for, is recording the adjusting entries and the closing entries in the general journal. So two-part assignment. Okay, so the part that you've all been waiting for, looking at these transactions and figuring out what exactly to do with them and how they are put into the journal. So our first transaction here, we want to look for keywords. Remember that when you approach these things, what you want to do is have kind of a flow of operations. So you kind of do the same thing every time, and that way you get into a practice and it becomes a lot easier for you to sort of decode what's being asked of you or what's being done. So we're doing the first column after the trial balance on the worksheets, which is the adjustments column. So you guys remember we just did an assignment about adjustments. I think it was 2 assignments ago. And this is when you have things to record for your business that have either happened already or are going to happen. And you want to make a note of those things in the journal and now on the worksheet. And so it's like adjusting numbers that you might already have in the books based on things that have happened within your business over this particular time period. So let's see. We've got the prepaid insurance is our first transaction, is a 1-year policy purchased on November 1st, 2014. All right, and so we are in April 30th, 2015. So we got to keep that number in mind so that we know how many months that we're dealing with here. Excuse me. So the first account, first of all, that's going to be affected by this transaction is the prepaid insurance account. All right, so the first thing I would do is I would check to see if I knew where that was on my worksheet. So the prepaid insurance account, that is an asset account. So most likely it's going to be toward the top. So if we look over here on our worksheet, we're going to see the prepaid insurance account right there. And it's got a balance of $5,150 in it. So we paid $5,150 for insurance up front way back on November 1st, 2014. And remember that it is now April 30th, 2015. So we got to figure out how many months have elapsed since then. November 1st is when we bought the 1-year policy. So November, December, January, February, March, and then April. If you're counting along with me, that's 6 months. Okay, so 6 months is half of a year. So half of our policy has already been used up or elapsed. So that prepayment of the insurance, we have to account for half of it already being gone. And so that's what this adjustment is about. So I guess we want to figure out what half of 5,150 is. 5,150 divided by 2 equals 25,575. Okay, so that's the amount of insurance or prepaid insurance that's already been used up over the past 6 months since we bought the policy. And remember that it's good for a year. So where are we going to put that? Well, we're going to put it in the adjustments column. And then we have to figure out, is that a debit or is that a credit? And so this is prepaid insurance is a asset. And we are taking out $2,575 because that's amount has been used. So we don't want to think that we have that still on the books. And so when you subtract from a asset, you credit it, right? So crediting an asset, and we will do 2,575. Okay, so that subtracts that $2,575 from the prepaid insurance account. That is no longer our money. That is the insurance company's money. All right, good. So now we have that part of the worksheet filled out. Now, remember that every transaction has to affect at least two accounts, right? And so this is the part that I think might cause some of you problems when you first do it yourself, because, my first instinct would be to look down the list here of accounts and look for the prepaid insurance expense account as my matching account or my other account this is affecting. But when you go down to the expense section, you'll see it's not listed there. So we have to create that account. And so we have to put that somewhere. So we are going to put it down here underneath the totals. Okay, so in there, I'm going to write insurance expense. All right, and so we have that the amount that we're spending on insurance over the past 6 months. And so then we are going to put in the matching 2,575 in the debit column. Remember that when you're adding to an expense account, it's always a debit, right? And so we just use the same amount that we found out up here, the 2,575, and that way both columns, the debit and the credit column, are in balance, right? Which is what we're looking for. So when we do that, you see these totals down here, update, and they are the same. So we've done that particular adjustment correctly. All right, so that is the adjustment column done for that transaction. And so what we want to do next is just kind of move our way across the worksheet, right, from left to right. So our next column is the adjusted trial balance. The one after that is the income statement. The one after that is the balance sheet. So like I said, I'm going to do 2 of these transactions for you, and I'll take you all the way through the process for the worksheet, and then I'll let you guys fill in the rest of the worksheet on your own once I've shown you how to do it. So I guess the next columns that we want to focus on are the adjusted trial balance. Okay, so the adjusted trial balance is now just the trial balance, but it's reflecting what we did in the adjustments. Okay, so we made an adjustment to this initial balance of the prepaid insurance, which was sitting at $5,150. That's what we paid to start with. 6 months has gone by. $2,575 of our prepayment has been used up. And so actually, as we know, that was for 6 months of a 1-year policy. So 1/2 has been used up. So we don't have to do another calculation. We know that the other half is going to be identical, the amount. So we still have $2,575 still in that prepaid insurance account waiting to be used over the next 6 months. So what that looks like in our adjusted trial balance is we just have a $2,575 balance left in the debit column of our prepaid insurance. All right, so it's just half of what we had before the adjustment. All right, so that goes there. And then in the insurance expense adjusted trial balance column, if we look over here on the initial trial balance, we didn't have anything in the insurance expense account. And I'm thinking I spelled insurance wrong. Sorry. There we go. I think there was an extra N. Sorry, tangent. Okay, so there's nothing in there to start with. And then we added, or we debited 2,575 into it. So all we do is carry that debit amount or debit total into the debit column here. So 2,575 into the debit column as well. And that just keeps track of how much we've spent on insurance over the past 6 months. All right, so that's good. The adjusted trial balance, you're not going to want to worry about these totals quite yet until you've got all of these transactions in there. Once you have all the transactions in there, it should balance balance out. Okay, it won't do that right now because we don't have all of the information loaded into it. Okay, so even though it's 5,150 on one side and 0 on the other side, we're okay for now. As I say, wait till the end and see if you've got a balance or not. Okay, so that is the adjusted trial balance for this transaction. Next thing is the income statement. Okay, so the income statement, you don't have to fill this out for every single transaction. Remember what's reflected on your income statement, which is your revenue and your expenses. So if it isn't a revenue account and it's not an expense account, then it's not going to be reflected on your income statement. So for example, our prepaid insurance account is an asset account, right? So an asset account does not get recorded on the income statement. Neither do liability accounts, only revenue accounts and only expense accounts. So the only thing that we have to put here is our insurance expense. So we just have to carry that over here into our debit column on the income statement. So carry this balance from over here to right here. So the 2,575 goes there. All right. And then we all we have to worry about after that is the balance sheet. And the balance sheet, this is like the balance sheet that you are used to filling out. It's just a like very simplified version here on the worksheet. So just like the income statement, you don't fill out the balance sheet for every single account that's here on the worksheet. You only fill it out for asset accounts, liability accounts, and capital accounts. Okay, so anything that would show up on, and drawings. So anything that would show up on a normal balance sheet shows up here, but no need to put on your revenues and expenses here because that's already covered in the income statement. So for this transaction that we've been working with, the prepaid insurance one, as I said earlier, prepaid insurance is an asset. So this needs to then, this debit account needs to be carried over and shown. The new balance needs to be shown on our balance sheet. And so we're just going to get that number from our adjusted trial balance. So that can be, that's in the debit column, remember? So we're just going to have it in the debit column of the balance sheet. Same number, 2,575. All right. And so again, these totals at the bottom, they're not going to work out yet. We have to make sure that we get all the information in here first. And then once we have done that, those totals should be relevant and should be balanced. But until we've done that, they're going to be a little off kilter, which is fine for now. Okay, so that is the first transaction done. Now, I know that took a while, and that's mainly because I had to explain each step. But as you go through this and you kind of get a workflow going, hopefully it'll be a little quicker than I'm able to do it as I'm kind of talking it out. So I'm going to do one more example for transaction 2. And then, like I said, I'll leave it there. I'll let you guys do the remaining transactions yourself, and then you can turn it in and I can make suggestions on what you need to fix or tell you it's perfect if it's perfect. So transaction number 2. This one has to do with supplies. Supplies were counted April 30th. The cost value of the inventory was $360. Okay, so this hopefully is a familiar style of adjustment to you by now. Basically, the idea is that we've reached the end of our fiscal period, and we're going into the supply closet and we're counting up how many of the supplies we still have on hand. All right, so over the year or over the 6 months since we did this last, a certain number of supplies have been used up, or a certain amount of supplies have been used up. So I guess the first thing we want to figure out is what accounts are going to be affected here. So supplies, easy enough. And then we look over on the worksheet and we see if there is a supply account, which there is. Okay, so that's good. So we've got one account identified. And then we need a supplies expense account. I'm going to quickly look down here and see if there are any supplies expense accounts already there. Turns out there are not. So we just have to add it down here underneath our insurance expense account that we created a moment ago. Okay, so those will be our two accounts that are affected by this transaction. Okay, next thing we need to focus on is the numbers. So there's $360 of supplies left in the closet. What we want to do is see how much we started with. So if we go up here and we look at our list, we see that there's $3,670 of supplies that we started with. So it looks like we burned through quite a lot of supplies over this time period. And another place that you can find that number is here on the worksheet. The trial balance has that loaded in already. So $3,670 of supplies is what we started with. Okay, so that's simple math. All we have to do is subtract the amount we started with, or I'm sorry, the amount that we have left from the amount that we started with. So calculator, 3,670 minus 360. That gives us $3,310 worth of supplies that we used up over this time period. All right, so we burned through quite a bit of supplies, which hopefully means the business was good, right? All right, so the question is, excuse me, the question is, where do we put that number then? So we want to go to our supplies account and we want to go into the adjustments column. And we want to then choose between debit and credit. Remember that supplies is an asset account. So if we are subtracting the $3,310 worth of supplies from this account, we want to make that a credit, right? Because anytime you take away from an asset account, it is 3,000, or sorry, it is a credit. Launch it or whatever the number was. Okay, so I'm going to put that there. All right, so we've lost $3,310 from the supply account. That's a credit because it's an asset account. Okay, and then remember that we also have to enter in that amount on our second account that's affected by this transaction. And again, when you're adding to an expense account or you're adding a total to the expense account, you got to debit that. So this here in the supplies expense account is reflecting that we have spent $3,310 of the company's money on supplies. So that'll give us an idea of how much we've spent, and maybe in the future when they're ordering supplies, they have some idea of how much we'll need going forward. Right, so that is the adjustment taken care of. Now the adjusted trial balance, right? So how does this affect the original? How does this affect the original trial balance? This adjustment that we just made. So this is where that number that they gave us, the $360, comes in. So we have $360 left. So this adjusted trial balance is asking us basically, okay, so how much supplies or what amount of supplies do we still have left in a dollar value? So in the debit column, because that tells us how much of an asset we still have, we're going to put that $360. All right, and then in our supplies expense account, we're just going to carry over the number in the debit column that we put in there, because again, remember this expense account wasn't even created yet, so thus there was 0 in it before. We just put $3,310 in there now. So that's the balance that we're going to carry over here. All right. And so that is the adjusted trial balance for transaction 2 taken care of. Next, we are going to do our income statement. Now, again, remember the income statement only has to do with revenues and expenses. The supplies account is an asset account, so we don't have to reflect it on the income statement part, but it does need to be reflected on the expense part, right? So we're just going to carry our $3,310 in the debit column over to the debit column of the income statement, because that's what's in there currently. All right, that's the income statement part done. And then we have the balance sheet finally. Again, balance sheet, assets, liabilities, capital accounts, and drawings. Those are the only things recorded in the balance sheet there. So for this example, the only thing that we have to carry over is that $360 that we now have left in the supply account. That's all of the supplies that we have left. So 360 goes there. All right, so now we're up to date in both the prepaid insurance account, the supplies account, the insurance expense account, and the supplies expense account. As I said, what I would like you to do is go through the rest of these, load them up, do the best that you can, submit it, and I can tell you if you did it right or if you did it wrong. I'm going to do part B of this video to show you how to do the general journal entries for the adjusting entries and closing entries a little bit later. So for now, I'll see you later.